How's it going, traders? This morning there was a great setup, so I took it. Profitable trade, however, not so good in terms of habits. So this morning I was in right out of the gates at 9:30:31, starting with one contract at 280. I was playing puts expiring on the 4th, which is Monday. I got my first entry point at 65 cents, which again, I need to learn how to be way more patient on these entry points. If I had not taken this one initially at 65 cents, I'm sure my average could have gotten way further down. So a recurring theme here, be more patient on the entry points. It's come to bite me once or twice before, and I'm sure it will in the future, but I just need to be more mentally aware of that. I might make a little sticky note, put it on my desk or something, but let it come to me. So anyways, building to 4 contracts, and then you can see I was off 2 at 6. These essentially happened at the same time. I took 3 off at 63 cents after my average had gotten down. I think my average was at 50, I don't remember, 57 maybe or so. But anyways, taking 3 contracts off there, and then my plan was to keep a runner because I didn't know it was going to unfold throughout the day. But again, emotions just getting the best of me, and this is where I'm really not happy with my trading. It stopped me out of a really, really good trade that unfolded for no reason other than the fact that I was nervous. So with that, let's take a look at the chart. Alrighty, so this is the SPY 5-minute chart that we were looking at this morning. SPY gapped up quite nicely, obviously, here, all the way up to about 280.50. Opened up around here, and then I immediately was getting short via puts right around the 280.50 mark, thinking that that would offer some resistance there. It went a little bit higher, so I started adding contracts to get my average a little bit lower. Added one in the next candle, and then 2 in this candle, one probably right around here, just before the 75-cent mark, and my next guess is the 51-cent contract that I picked up. Probably came somewhere in the upper wick there. In hindsight, could have gotten in for a little bit cheaper again. Up here, probably a 48-cent contract or 2 picked up on the wicks of these 2 candles, but didn't happen, and that's a-okay. But the main point here is becoming more patient and letting the move come to me. Sure, the price that was, in hindsight, I'm justifying that by expecting some resistance at 280.50. But the pre-market momentum totally carried into the first few minutes and pushed the price a little higher. I need to physically write that on a note and stick it on my computer because too many times I've gotten a bad first entry because of that. Anyways, we had these 2 candles form, which were perfect, kind of what I was expecting on such a large gap up. And this is really where you should start getting short based on these 2 candles. Not here while the price is still moving upwards, here where the price is sort of going sideways. So that's another note. And then we had this quick snap. If you were watching this morning, you know this candle was a quick snap to the downside and then it recoiled. If I scrunch up the volume down here, you can just see, if you looked at this red bar here correlating with this red candle, how much bigger the volume is here than here. So someone was dumping lots of shares here, and obviously with the quick reaction in the upwards direction after that, it made me a little nervous. So I got 3 contracts off there to lock in some profits. I think that was the 63-cent exit. And then the next one, same thing happened. Price made a quick, sharp move to the downside and then started to recoil, and we didn't even break past that low. So this was making me feel a little bit nervous, but again, there's no good reason to stop out of this trade right here after we have a nice big red candle and another red candle happening. There's no reason to get nervous and stop out. So I did, however, stop out just based on lack of discipline and essentially emotions getting the best of me. I didn't want to see a green trade go red. That's one of the worst feelings you can have. And I didn't want that to happen. So emotions got the best of me, and boom, I was out there for, I think, 20 bucks or whatever it was on the day, when in reality, had I have held and stuck to the plan did not say to get stopped out on a candle like this. Had I stuck to the plan, probably wouldn't have gotten stopped out until somewhere in here. That's a considerable amount of money left on the table there. Could have made up for that small loss I had the other day. Could have done a lot of things, but it didn't happen. And this is the trickiest part of trading, is learning to let go of those emotions and just stick to the plan. You have real money on the line, real risk on the line. It's tough to do, so that's something I'm working on. I think by writing that physical note about the entries and then about the exits, only stop out when you should. That may help a little bit, but we can only find out through time and by continuing to trade. So I'm going to continue. I encourage you all to learn and continue on your own path. If you enjoyed the video, leave it a thumbs up. If you have any questions or comments about what's happening here on the screen, let me know down below in the comments section. As always, subscribe if you'd like to see more of this content, and I wish you a good weekend. Look out for the weekly watch list coming out on Sunday and a green trading week next week.